the Business Finance Podcast, brought to you by the Best Finance Group. New episodes every Friday. Hello, good afternoon, and welcome to the Business Finance Podcast. He's Jack Seymour.
He's Phil Murphy.
We're on location today. We're at the Celtic Manor in God's country. We're being followed around by the guy on the mower. Wherever we go, he's following us. I think he's interested. He wants to find out what we're talking about. But yeah, thanks for joining us. Jack, how's things this week?
Yes, very good, very good. I thought, we'll give some case studies around people that we've been speaking to, shall we?
Yeah. You've had a couple of good, interesting meetings already this last couple of days. I've had one as well, which we'll talk about. But one of the people I spoke to yesterday had just started out in business, and I was just thinking, oh, it was 10 years ago. Imagine starting out in business, all the sort of trials and tribulations coming his way, and hopefully we can help him with some finance. But just maybe being up here reminds me, when I first started my own business, I thought I'm going to be playing golf all the time when I start my own business.
Yeah. And
then just needs must, and it just doesn't happen. I don't think I played for about 5 years, so it's getting a little bit easier now, so we can have the odd game of golf. So I'm sure we'll be up here soon. Where should we start? What was the
Well, should we start off with some startup businesses that I've been speaking to this week?
Yeah.
Great. So there's one chap in Bristol. He's starting a importation of food business, and he's looking for some startup funding, around about 100,000.
Right.
He's acutely aware of what he can and what he can't do, and he came to me and said, "Look, Jack, what's your thoughts around equity and what's your thoughts around debt?" And I gave him some strengths and weaknesses of each, and we decided on debt was the way forward to give him that funding.
Okay.
And he was actually in a fortunate position. He's, as I say, he was looking to raise 100,000. He has 2 buy-to-let properties, which he's got about 200,000 of equity, 250,000.
So he was asking you, shall I use the equity that's tied up to borrow against that? What was he exactly?
Yeah. So he was saying, so can I use the equity in my properties to leverage debt against it on a business loan, a term loan of around 5-6 years?
Yeah.
And what would that roughly cost me? And the answer to that is around, depending on his credit and the business requirements, anywhere between 1% to 2% per month.
Yeah.
Or shall I get private equity and private investment? And that's not something that we facilitate. So he would be giving away shares in his business if he were to go down the private equity route. So that, as I say, he said, look, it's short-term pain, because ultimately the debt is going to be a bit more expensive as a startup in the first couple of years, but then we can always refinance it once he's rocking and rolling and his business is trading. So that's one case.
Yeah.
And a second case is quite an interesting one. A lady who manufactures vinyls, as in...
Oh, right, yeah. It's making a bit of a comeback, isn't it?
Yeah. And, so she's manufacturing vinyls and exporting them to America.
Oh, right.
She's saying, well, the vinyl, by the time I get the file and then produce this vinyl, it takes about 3 months.
Wow.
So how can I support cash flow and working capital in this time? And I said, well, what about selective invoice finance or spot factoring? Said, what's that? I explained the benefits of it, how it supports cash flow, and essentially, as soon as she invoices out, she gets a percentage of that, typically 80 to 90% of an upfront payment, which she can use as working capital to produce the goods, and away she goes, like a working capital cycle. Brilliant. And then she said, well, what happens if my customer doesn't pay? And the lender has paid me that money. That's a great question. What you can do, you can have bad debt protection, which essentially sort of ensures, if you like, covers the invoice against bad debts if that customer can't pay, won't pay situation.
Yeah.
And she said, brilliant.
Yeah.
That's happened to me twice in the past 3 years, costing me about 15,000. Right? And she said, how much is that going to cost? And the answer to that is around starting about £4,000 per annum as a premium, and then she can pick and choose what customers she wants cover on, and she has the ability to credit check them as well.
Yeah.
So, that's an
interesting one. Yeah. Well, by the very nature of single invoice finance, where there's no spread of risk, typically the lender will want credit insurance, and it will typically be built into the price, won't it?
Yeah, exactly. Yeah. So you get exactly that. It's a bundled fee, which a lender will have it credit insured because of their risk. Yes. So they'll never. The benefit of that is you'll never overtrade with your customer, because the lender won't allow you to.
Yeah, and single invoice finance, very good for international trade, isn't it?
Yes, yeah. And there's a new lender on the market that we spoke to yesterday called Newport, which are part of UK Export Finance. So if you're doing a minimum of 5% of turnover export, they've got a facility that can do single invoice finance around the world.
Oh, it's very good. Oh, there's two interesting ones there. Well, I've been working on one this week, which is a gentleman who has a joinery business, and he did work with a partner, decided to go his own way. He set up as a sole trader, but he's already starting to get contracts in. He's got invoices for £5,000, £10,000. He's got subcontractors to pay. He's got materials to pay for, and it's proving tricky. It's proving tricky because you would need because you're raising applications for payment, as you'll know if you're in construction. Not all lenders, or very few lenders, will actually work in construction where it's very contractual and you're raising applications or payment certificates. It makes it harder that he's a sole trader, not a limited company, even though he's a homeowner. So it is proving a bit tricky, and some of the construction finance facilities, they'll probably want a turnover of about £300,000.
Yeah.
So again, you're just starting out. Even if you're doing 10, 15, even say 20 a month, then that's what, £240,000 turnover predicted for the first year. It's the pool's getting smaller and smaller. So we're looking at a few options. We've got one lender that is interested, so they're going to try and work together. So worst case scenario, he may need to go limited at some point, but we'll sort of cross that bridge and we'll work together. And we'll get there eventually.
That's fantastic. So, that's a really good solution there, actually, that you found for him. You know, and there's quite a few challenges from a lending point of view which you were facing there. So construction, sole trader,
new start,
but you're overcoming it. So fair play.
We found one. So yeah, that's what we do. I'm really getting on well, and I think you can tell that I'm working hard, and it's it'll be great if we pull this one off. It'd be really, really good, because I think he's going to fly. He's got loads of contracts lined up. He just needs to be able to have that cash to pay subcontractors, take on the work. So fingers crossed with that one. And
just touching on there, what you said, like, it's really rewarding, and actually you can see. I spoke to a client yesterday that I put a £100,000 term loan in for him. 3 years ago. He emailed, I spoke to him, we spoke at 5 o'clock. He owns a pizza restaurant in London, Hackney, and if you are watching, Rich, a shout out, that it's done fantastically well, and he's come back and he wants to open a second site in the theatre, or near the theatre there, and he wants funding for that. And I came off the call, and it was so lovely to speak that actually the difference, that funding that I put in place all those years ago and how the business is performing now really emphasises to me of why we do what we do.
Yeah, it's very rewarding. It's very rewarding. We're trying to grow our business. We always say this, and we're trying to help people grow their businesses. And,
and the more successful they are, the more successful we are. So that's why we're there to grow and fuel the growth, aren't we?
Obviously, he's come back to you because you would have had good communication. You delivered what you said you'd deliver, and he's come back to you a couple of years later saying, I want to do more. And I get the same thing. A lot of people say, I'm coming back to you. I've had someone who spoke to me the other day that put a construction finance facility in place a year ago.
Nice.
He's come up and he said, these fees, it was all you could get. He only had one option, and that's all you could get. And I said, we'd review it in 12 months' time. And before I could ring him, he was on my calendar to ring in a couple of weeks. He rang me up. He said, Phil, I want to go back to market now. We've got another year's trading under our belt, and I want to use you because you did a great job last time. So it's like fantastic. Thank you very much. Appreciate that. So that's what it's all about, isn't it? Building that trust and relationship, and watching these companies grow with our support. So that's really good. On the subject of golf and being here, you've got something to announce.
We've got a charity golf day on May the 8th, and it's there to support a charity called Headlight, which is just down the road from the golf club, and is part of mental health. Part of the mental health hospital there. We're hoping to get between sort of 40 to 60 people there, and I will put an announcement out on one of the par 3s. You will have the option to win £10,000.
That's for a hole-in-one, right?
That's for a hole-in-one.
Whoa.
That was the only caveat. The only caveat, that you got to get a hole-in-one. No practice swings allowed. So
I won't get too excited about that. It'll take me if I get a hole in 10, I'll be happy. But with my wooden clubs, bag of Vance. But, so that's great, fantastic. £10,000 prize. Oh, you've got to be there.
So if you're a golf player and you're watching this, then where's it
being held?
Good question. Knoll Golf Club in Bristol.
Right.
So it's one of the oldest golf clubs in Bristol. Very prestigious course, and people who do play golf will know it. It's a lovely course, and hopefully it's a day like today, the sun's shining, with a bit of luck, should be brilliant, should be really good. So
who are we looking to invite? New clients, potential new clients, old clients, introducers, accountants?
Absolutely, all of those, all of the above really. So any clients, past, current, and potentially future clients, introducers, as well as lenders, because it's really bringing together a community that can all benefit one another and hopefully take something from the day, as well as raising money for charity and most importantly having a great day out and enjoying it.
Yeah, fantastic. Hopefully it's something you can do every year.
Yeah.
So, oh, well, that's fantastic. So keep an eye out for that. We'll put the announcement out, and probably a few drinks after, do you reckon?
Potentially, we'll have to wait and see.
We'll see. I'm sure there will be. Well, that's it. Thanks for joining us this week. Jack, thank you. Look forward to seeing you next week. And yeah, take care, everyone. See you again. Thank you for joining us. If you have any commercial finance requirements, please contact us at thebestgroup.co.uk.